Alright guys, so I'm going to show you guys a perfect example of a good distribution scheme, and probably also have one for a good accumulation scheme on Euro USD CAD. But we're going to start off with the Euro. So people, when I talk about distribution, this is typically what I like to see. Now, don't worry about the fact that this is a daily chart. This could be the 5-minute, 1 hour, any type of concept that I illustrate to you guys. It can be utilized on any time frame. It really does not matter. But this is what I typically do. So we know that the market from this swing high down to this swing low is bearish. Clearly the market's kind of just been pushing lower. Some people can consider this a market structure break, and we did get a reaction off of this. But again, I'll go ahead and talk to you guys about when a market structure break might not be valid. That's actually going to be in a separate video in of its own. But regardless, when we see this price structure here, when we draw the fib, we know that, okay, the market is actually at the 70, 62, and the 79. So the market right now is currently at a premium level. So the market is at a premium. Now, when we look to the left, right, we always want to look to the left and we want to see where are our levels. We see that we have an imbalance right there, which is a fair value gap. And I'm going to make my fair value gaps yellow so you guys can utilize that down the line. Whenever I draw anything yellow, it'll be an imbalance. And we also have this order block in here, this pretty much this zone. So you can use the bodies of it right here. And I'm going to make that, where's my supply and demand level right there. Or if you want to use the full range, it really is up to you guys, doesn't matter. So we have two areas of confluence in here, but we see that the imbalance was working. Now notice, this is what I was talking about, where you want to see the market kind of make pushes and you start to see like engulfing candles like this one. You want to start to see rejection, and then this candle was kind of like the sealed deal right here, where you have like this liquidity wick right there where the market kind of just ran up, cleared all these highs in here, all these prior day highs, and we dropped lower. Now, typically when we see this at a very key level, we can identify, all right, now the market is somewhat, it's showing signs of bearishness, and we know that if the market is bearish, right, we have clear rejections here, we can ultimately look for this low in here to get triggered. And from here down to here, it gives us a potential trade setup or idea that we can look for in order to identify that the market is going to come down here. Now, if you guys have been in my Telegram recently, you know that I've been calling the Euro short for a little while. And again, we haven't hit this low yet, but the concept is still the same. Now, I want to go back to this cycle right here. Within this cycle, right, again, this is the daily time frame, but it could be any time frame. We can also go down lower if we, let's say we have the daily perspective, and we can kind of look for signs that the market wants to head lower. And signs could be simply something like this, right? So we see that the market, and let me just remove the imbalance for now. We see that the market, right, had a push from here to here. So after we had this run up in here, and you could use, like, let's say we use a line chart. Let me go back to candlesticks. Actually, we have this market that moves down here, and ultimately what happens is the market we can kind of see from here down to this, if the market kind of respects any level which is a premium. And let me just remove that for now. So when we draw our fib from that level to that level, for example, we can go down and see that, all right, what levels do we have around here that are a premium level? So where is our bearish order blocks? Where is our imbalances? That's right here, where you'll see that the market had an imbalance right there. And just look at how well the market respects those levels. And let me just put it back to imbalance right there. Look how well the market respects it. Now, the thing that you have to understand when the higher time frame levels, and we're going to get more into it again down in the other sections, the higher time frame, if it's a daily 4 hour, it may take some time and take multiple tests before the market is ready to make its move. So that's something that you have to realize and be patient about. Like, yeah, it retested it here once, and then some people might think, oh my God, like, you know, especially when this candle was bullish, that this was not going to hold. You have to understand that sometimes the market will retest these levels multiple times before finally dropping. That's the whole point of like the distribution cycle. The market makers are kind of constantly selling positions on the move up before they ultimately bring price lower. And that's essentially what the distribution cycle is. And I'm going to go ahead and now show you guys the accumulation cycle. It's pretty much the exact same thing, but it's going to be on the accumulation side. Now, actually, before I actually get into that, I just wanted to show an illustration of it, just like, you know, as a way to draw it out so you guys can kind of see that. Now, it really is just multiple highs that are kind of trying to the market's trying to push up and then rejection, push up, rejection. Then you start to kind of see these lower lows, lower highs, and then we start to finally transition outside of a distribution scheme. Okay guys, so I pulled up like what I was going to show you guys in terms of like the phase E. So again, I don't necessarily care about all this in here. Like people want to, you know, just memorize. I think this is just super confusing. Just understand that the whole point of distribution and just constantly rejecting a higher time frame resistance. Like it doesn't have to be that complicated where, oh yeah, this is the UT, this is the LPSY. Like I don't even know what any of this means. But the only thing that I do kind of utilize is the phase D to phase E, where the market, you see, once the distribution cycle is kind of over, you'll start to see that the market now, the impulses aren't as high. The market is starting to trend a little bit lower, starting to trend, and then you start to see weakness, and then you start to see a very significant price drop lower. This is very beneficial because what you can utilize understanding this concept is on, let's say, on a daily candle after, let's say for the example on the euro. I'm going to go ahead and go back to the euro example. Let's say during this schematic, once price kind of like, all right, we kind of like came up here, tested. Now what you can kind of anticipate the next day, right? Or let's say this is the 4-hour time frame. Let's go back down to the daily. When this daily candle closes, you can just anticipate a little bit of an intraday run up, right? And then start to see price drop lower. And then you could anticipate the next day is going to be bearish, and that can kind of be a way to determining a daily bias during key moments. So that's something that's very important, because once we're in that phase E, phase D scenario, when the market is done having distribution, typically the market is ready to head lower. And that's just a major edge, because we know that the market, the bias can be bearish, and because this one is a daily time frame, we have a huge pip range. Like this pip range, you don't even have to catch the top. That's why I always tell people you don't have to be in the market in here. If you can, perfect, right? But if you can catch the market even from here to like down there to this zone right there, to that level, I mean, that's 240 pips of profit that you can potentially just, you know, day in, day out look for sells. But yeah, man, that's pretty much it for the distribution cycle. And again, I'm going to go ahead and put Wyckoff accumulation so you guys can see the inverse. And the inverse as well, let me give you this one where it has the phases, where you see the market starts to go lower. We start to finally, you know, once we start to finally accumulate enough orders, the market is going to start to go up into phase D, phase E, and we're going to start to push up. And all the accumulation that has been taking place will typically see an aggressive run up. Now I'm going to go ahead and show you guys the example on dollar Canadian, which was, I think, a really good example. Let me remove all this. So here's a perfect example. So what do I always say when we talk about the accumulation or distribution? We want to see it at a very key level. So look at how we have on the daily time frame. We had this clear stop block right here. We had this clear zone in price, and I'm going to make this blue, the supply and demand level, and we're going to go and draw out the 50%. So now you guys are going to start to see me utilizing multiple concepts. Let me just put the 50 on here because I don't really use the 50. All right, so it's roughly right there. Perfect. Because again, this is a pretty big range. So typically big range, stop blocks, order blocks, whatever, I'm going to usually use the 50% mark. And look how, I mean, this is just beautiful, right? And again, this is a daily time frame, guys. So this is just something that you can always really, like, that's why I like the daily time frame, because the ranges on this is pretty insane. Like even if you took it up to like this level right here, that would have been enough. But regardless, we're going to talk about it now. And let me remove all the indicators. Perfect. So this is what I mean by, like, look at how the market kind of, we have multiple lower, like as soon as we get into this order block range, look at how the market is constantly making new lows. Then we had an extended run lower, and then the market is just consistently running out lows. But you start to see impulses. And look at this leg in here. Once you start to see that, this is kind of like that phase E scenario. It doesn't really offer that much of a pullback because the market was accumulating on the way down here, and now we have the aggressive run up where the market kind of just pushes aggressively all the way here, because all the orders that they needed to accumulate the damage has been done here. Now, a very good indicator that I'm going to add on, because you guys can utilize this as well. I use it from time to time as an extra confluence. It doesn't necessarily make or break the setup. But what I'll typically do is if I start to see, like, let's say that higher time frame level, I'm going to draw it back out right here. When we see this type of divergence where the market is making lower lows and then you have your MACDs making higher highs, you know that the market is very, very likely to kind of, this is just more of a confluence that it's like, all right, the market is gearing up for a potential squeeze higher. Even if the market was overall bearish, typically you'll see a squeeze, even if it's just to say to clear out this liquidity pool there. In this scenario, obviously, it just completely reversed. But there's an edge here. When we know the market is accumulating, we can expect some type of short-term push to the upside. Whether, again, it's going to clear a liquidity pool, whether it's going to fully on reverse, that's ultimately going to depend on the higher time frame. So yeah, and if we go to the euro, I bet you that there's going to be some, during this schematic right there on the daily time frame, I'm pretty sure we're going to see some form of divergence right here on the 4-hour, which, I mean, look at this, guys. This is a perfect divergence play because the market's constantly making higher highs, but look, the divergence is weak, so there's like no volume essentially on these run-ups. And again, you don't have to be a seller in here. If you can get an entry somewhere in there to catch a move there, that's perfect. And I'm going to go over examples on, obviously, like, you know, how to find a setup intraday when you kind of confirm a bias. That's going to be in the later sections when I talk about top-down analysis. But yeah, guys, hope you guys really enjoy this. I personally love distribution accumulation schematics. These are my bread and butter. A lot of times, especially on the higher time frame, because it gives you time, right? It allows you to think, it allows you to anticipate the move. You don't have to be in it right there, and then you can anticipate a big move that's coming up in, let's say, a few weeks, a week or two. And that's kind of where I thrive, because I like these big ranges where the market's just going to offer you so much opportunity to get in. Because even if you don't get in here, you can try to get in there, try to get in somewhere here, you know, and so on.